Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be doing a full comprehensive guide for people that want to swing trade. We're going to be showing you guys everything you guys need to know before getting started, some tips, some tricks, some techniques, and some strategies that I've used over the past 7 years of swing trading. So get your guys' notebook. I'm glad you're here, and make sure you guys hit that like button, subscribe, and if you guys want to learn more about swing trading, we do have an amazing course where I teach people how to swing trade, my strategies, my approach, when to buy, when to sell, how to find opportunity, the scanners we use, the criteria. It's not a get rich quick scheme. It's not alerts or anything like that. We teach you honest strategies that I've used over the past 7 years of swing trading. So check it out down below. We have our Black Friday sale going on. Today is the last day for that sale for 51% off. So make sure you guys sign up. Click that link, and guys, let's jump into this. All right, so what is swing trading? So swing trading, you can swing trade just about anything. You can swing trade stocks, ETFs, cryptocurrency, Forex. And for me, I swing trade stocks. So that's what we're going to be really focusing on today is stocks. So swing trading in simple terms is when you buy a stock, you hold it for more than a day, but less than 1 year. When you buy and sell a stock during the same trading day, that's considered a day trade. It's a different strategy, it's a different setup, and honestly, you have to be a lot more involved with the market. Swing trading is better in my opinion because it gives you a lot more flexibility. You can do it with a full-time job. You can manage your stocks, before the market opens or after the market opens. You can do different order types, so you can always be prepared no matter what's going on with the stock you're holding. Now, when you buy a stock and you hold it for more than 1 year, that's a different type of trading. It's actually not trading. In my opinion, that's considered long-term investing because you're holding the stock through several earnings reports. And so you start really caring about the fundamentals. So like the cash flow, the revenues, the profit margin, all that stuff more long-term investors care about. That's where those people make their money. Now, swing trading on average, I hold my swing trades for about 6 to 9 days. And I think that's like the sweet spot for the trades. Obviously, there will be times where I even day trade a stock, and there will be times where I buy a stock and I hold it for a couple of weeks, a couple of months. It all depends on the stock and the approach I have with the position. Now, if you guys are just getting started with stocks, you may not know how to buy a stock. So buying a stock, what you guys will need is a stock broker. I'm sure you've heard of companies like Robinhood or TD Ameritrade. Those are stock brokers. So those give you access to the stock market where you can buy positions, you can buy stocks. Now, for me, the broker I use is a company called Moomoo. They're an absolute fantastic company, and this is a trading broker, so it specializes for traders. And the reason why I personally love it is because they offer a whole bunch of great tools, analytics. They use artificial intelligence, and more importantly, why I think a lot of beginners should use it is because they offer something called paper trading. Paper trading is just like trading, but it uses simulated money to practice. And I think that's very, very important. And this brings me to one of my main topics of today is to not expect and to continuous to learn. What I mean by not to expect, the market doesn't owe you anything. A lot of people think that when you buy a stock, it's automatically going to go in your favor, when in reality, 85% of swing traders that swing trade actually fail in the market. So you have to ask yourself, what are those 15% doing right? And those 15% are continuous learning. They think the market doesn't owe them anything. And so they constantly improve. They paper trade to learn new approaches, new strategies, and they don't expect to make $1 million. For me, I've never lost money taking profit. What that means is when I'm up on a position and maybe it's not going my way, or I'm getting nervous, or maybe some emotions are getting involved, then I have no problem just taking my profit. A lot of people think that when they buy a stock, it's going to go up, and they're going to make $100 a day. They're going to double their account in 30 days. No, the reality of it is swing traders make money off one thing, and that is consistency. Consistency is like most things. It's like working out. Being consistent in making 1, 2, 3% on your money is a lot better than trying to have these massive returns and to double your account. It's always better to trade the best and leave the rest. Now, within the broker, there is going to be a whole bunch of things that may seem overwhelming, like different account types and stuff like that. my recommendation is to just do a standard broker's account. That's what Moomoo offers, because you're going to be constantly depositing money, withdrawing money, especially if you are just getting started, and especially if you're a full-time swing trader and you're withdrawing money to pay your bills. So now that we understand how to buy stocks, now let's look at stock charts and turn to the computer and look at candlesticks. All right, so a candlestick is a charting tool that a lot of traders use to get more information about the stock. Within each candlestick, it pretty much shows 4 pieces of information. The first thing you have to look at is the color. A bearish candle, so a stock going down, is going to be red. A bullish candle is going to be green, and that is going to be the stock going up. So what it shows you is the high within this period, because this period or this candlestick will be a period of time. So this could be a 1-hour candlestick. So within that 1 hour, it's going to have a high price. It's going to have an open price, so the price that it first came to. It's going to have a close price, so the price that it left at. And then it's going to have a low price. Now, looking at the bullish candle, it's pretty much the exact same thing except for two things. What it shows is that high, it shows the close instead of the open. It has the open price, and then it has the low. So it still shows 4 pieces of information. Understanding candlesticks are very, very, very important for your trading so you can have more information. Within a stock chart, you guys will have access and you guys will be able to choose what type of charts you look at. You could choose line charts or you could choose candlestick charts. That's what I always recommend, is candlestick. So now that we understand candlestick charts, now let's actually look at basic technical analysis. All right, so this is Moomoo. This is the broker I am using. All right, so if you guys go in the upper left-hand corner, you guys will see 1D. What that means is each candlestick represents 1 day of trading. For most swing traders, they actually will look at the daily, the weekly, and the 1 hour chart. And I'll explain why all of those are very, very important. So looking at the daily, so each candlestick represents 1 day of trading. So what it offers is that high price. So if we actually zoom in, we can pick a random candle. We'll do this one here because it's pretty good. So that wick up here represents the high. Then we also have the open, we have the close price, and then we have the low. So it represents 4 pieces of information here. So now looking at this, you guys will notice that I have several different lines. We have a blue line, a red line, and a green line down on the bottom. These are what we call indicators. So this helps traders get a general gauge of what's going on with the stock. Each indicator represents different information. The ones that I absolutely love are going to be moving average lines, they're going to be RSI lines, and the volume and MACD. So 4 indicators. There's traders out there that use 5, 6, 7, 8 indicators. For me, as a trader, I love the expression MISS. M-I-S-S. Make it simple, stupid. I'm not going to be a trader that overcomplicates my trades. I'm going to be a trader that has a small set of indicators that I understand everything about, and I'm not going to be overwhelmed. I'm not going to be confused, and I'm going to know exactly what's going on. So looking at this stock here, this was actually a stock that we recently traded here. And this is ticker symbol SPRY on the 1 daily chart. So if we click 1W, each candlestick represents 1 week of trading. So we'll go back to that daily here. So getting back on track with the indicators. So we have this blue line, which represents the 90-day EMA line, also known as a moving average line. These lines act as pretty much 2 things. They act as trend indication, so you can look at it and get the general trend just like that, so that you guys can see it has that nice upward trend. Also, what it acts as is going to be support and resistance. Support and resistance are key terms traders use to honestly know when to buy and when to sell. You often will buy at support and sell at resistance. Let me show you a great example of that. So looking at this here, you guys can see this, this great line here. and look back at previous tendencies. The thing about trading is history tends to repeat itself. So you guys can look back at this blue line here where it hits this line and we had great buying pressure. Hit it again, buying pressure. So recently the stock sold off and hit that level again. That's exactly where we entered the position. And the stock evidently continued to rally up and obviously dipped down, and we covered profit on that dip down. So let me look at another indicator. The other indicator is going to be this red line. This red line is another moving average line, but instead of the 90-day moving average line, it's going to be the 200-day. The main difference between the 90 and the 200 is going to be support and resistance strength. The 200 is not going to get hit as much, but it's going to act as a harder support and a harder resistance. So you guys can see where it hits at one time, great move. But when the stock is below it, you guys can kind of see where it has just a hard time breaking above it, establishing resistance. The thing about trading, old resistance has tendencies of acting as new support. So now here the stock rallied its way up, and what we want to do is we want to look at different time frames, because one time frame could be telling you one thing and another time frame could be telling you another. So looking at the hourly here, what do we notice? We notice the stock popped up, sold off, and established this downward trend right on this trend line. This brings me to my another point here of trends. You guys can see this hourly time frame. So what does this mean? Each candlestick represents 1 hour of trading, and you guys can see it just has this downward trend where it hits this several times, establishing resistance. Then it popped up and had a nice breakout. This is where we entered the position, and ever since the stock rallied its way up, forming a new trend, right? If we go ahead and draw it out, a new trend where it hits this now several times, establishing support, dip down through the supports, and that's where we had our stop loss. So the max amount of money we're willing to lose on the trade, but in this circumstance, we did cover profit. And the reason why we put it here is because of the supports, right? Like I said, moving average lines that act as support when the stock is above it. So it hit these, a couple of times, dipped down, and then we exited the trade. You also want to look at the weekly time frame, and the reason I love looking at the weekly is because you guys can see it did have this really nice little trend line where it hits this point several times and established good support. Hit it, buying pressure, buying pressure, buying pressure, buying pressure. And that's exactly what we want to see here. Great moves going in that direction. Another stock here that showed a lot of potential here was ZIM. This was another stock here that we called out in the group. What did we notice? Heavy support where? On that 90-day moving average line. So where would you want to buy the stock? On that 90-day moving average line. Now you also want to look at other indicators like that 200-day moving average line and another one we haven't mentioned called the RSI. The RSI is called the Relative Strength Index. This pretty much tracks momentum inside the stock to make sure that when you buy a stock on a low, it's not going to just continue to sell off. So what you do here is you have this RSI down on the bottom, right down in here. So this right here, you guys can see where the stock, let's go ahead and draw it out, was trading for about a 35. The last time or times it was trading for a 35, what happened? Right in here, what happened? Great buying pressure. Previous to that was in here. Great buying pressure. So looking at several indicators can help you as a trader get a general idea of what's going on with the position. You also can use things like trend lines, which often act as support and resistance to get a general gauge of what's going on as well. Where it hits this, what do we notice? That great line here several times, establishing good support. So the more supports you have, the better off you're going to be. So with swing trading, what are some key things that you need to understand before jumping into it? We did cover a lot, so feel free to rewind any of the video, ask any questions down on the bottom, and make sure you guys like and subscribe and check out our school. But if I was going to give you guys a couple of pieces of information and some things to do before swing trading or during your swing trading, is the number one thing is to journal your trades. Whether you use a little journal, little dollar store journal, or we do have a digital journal. I'll put that down below for you guys. But journaling your trades are so important because what it does is it helps you figure out what's working with your trades and what's not working. It helps you really cut down on that learning curve because you can go, well, I bought a stock on the 50-day moving average line. Maybe I should wait for the 90-day moving average line. Maybe I bought a stock on a trend line with only 2 touches. Maybe we should wait for 3 touches of support before entering. It helps you figure out what's working and what's not working so you can focus on what's working. The second thing that I would do if I was getting into swing trading is to develop a checklist. A checklist is criteria that you need to have for a stock before you buy it. You don't want to just buy random stocks. You want to find stocks that meet your approach, meet your strategy. So some of the things could be a stock on a support level on the daily. Another one could be a undervalued RSI, a stock on a moving average line. You want some sort of hourly breakout. All that stuff and all those things and criteria are things that should be on your checklist so you can focus on the best stocks and leave the rest. Trading, a lot of it, guys, and a lot of you watching, I'm sorry, you're not going to be successful. It's just the reality of it. What makes a successful swing trader successful is the willingness to learn. You have to constantly learn in the market. I've been swing trading now for 7 years, which sounds crazy, but I've never once thought I knew everything about stocks. I've never done it. I've always continued to learn from my mistakes and things that I've done. I've never looked at losses as losses and been scared to look at them. I look at losses as lessons, just like how in college you take a college course that costs $1,000 or $2,000, whatever it costs now. Those courses cost money. That loss in your trade should be a lesson. It should be a lesson, a course where you can learn from it and never make that mistake again. And obviously, no matter how good you are as a trader, you're gonna have losses. It's just the reality of it, but you just can't let it beat you down. You got to continue to focus on good risk management, and we'll do a full video on risk management. But risk management in simple terms is just setting those stop losses, having good risk and reward, so risking $1 to make $2 or $3. And check out our other videos where we really talk about it. So guys, I hope you guys all enjoyed this. I hope you learned something. If you did, hit that like button, subscribe, and we will see you guys in the next one. Hope you guys have a great rest of your day. Check out our school, check out Moo, and check out our digital journal. But I hope you guys enjoyed it. Take care.